Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, the gold prices surged to a record high driven by safe haven demand amid concerns over U.S. President Donald Trump's tariff plans. Additional support poured in from inflows into the world's top gold-backed ETFs. Prices of the yellow metal have surged nearly 45% in just 12 months. Silver is not far behind. The precious metal hit a three-week highs in this week on the back of heightened inflationary pressures and existing tariffs on Chinese imports and metals. So what's in store for gold and silver prices from here? Should you be investing, and to what tune and what quantity? To discuss all of that, we are now joined by Michael DiRienzo. He's President and CEO at Silver Institute. Thank you, Michael, for joining us. And it's a morning for you right now, so good morning to you. What is your sense, first of all, on the tariffs, really? Because silver, while of course is a precious metal, it also is an industrial metal. And with the kind of tariffs that we keep hearing about, how are you looking at impact of that on silver?
Well, thank you again, Manisha. It's always an honor to be on your show. Look, at the way we see the market today and how tariffs could potentially affect the global silver market is really the question of the day. And many analysts are working to figure out how this would impact. What we're seeing directly is we're seeing flows of silver in mass quantities from London to the CME here in New York. We're also hearing that there's so much silver and gold coming into New York that a lot of it was shipped to Canada and is in the water between Canada and New York, waiting to get into New York City. So since the election and right after the election, then President-elect Trump made assertions that there will be tariffs, there will be blanket tariffs, and that would affect our producing companies in Mexico, Canada, and the United States, not to mention those refining companies in the United States that takes in doré from both Canada and Mexico to be refined. So it potentially could have an impact.
Oh, well, absolutely. Michael, since you touched upon that topic, is there any number available on how much silver has been imported into U.S. until now? And do you see this as a one-off, or do you see a change in pattern here?
You're seeing numbers that are very similar to what we saw during COVID. Okay, so we're just below the COVID numbers. I've seen anywhere between 380, 390 million ounces of silver that have come in. But when you go back to the COVID days, it was about 400, 404. So we're bunching up against that right now.
And also, would you say that this is an aberration? I mean, markets are readying themselves for tariffs. If the tariffs do not come, do you see all of this gold and silver then coming back into its original markets?
I don't know. That's a question for the bankers and those that acquire the silver to determine. But I will say this. It has clearly affected investor sentiment, right? Because on the industrial side for silver, could it potentially have an impact? We argue no. We argue that the silver industrial demand is going to have a record year. And on the gold side, you know, they're bunching up on record numbers, prices for gold.
Well, absolutely. Michael, what's your sense really on the industrial demand itself? I mean, this is going to be a fourth, fifth year that we'll be looking at a record demand. And where do you see this demand coming from? What sectors and what geographies?
Oh, that's a great question. So the industrial demand, we do forecast over 700 million ounces of silver, which would be another record for silver industrial demand. We think that will really be paved by the electronic and electrical sector. So, for example, silver's use in photovoltaics, which is continuing to grow, will set another record for that demand center in 2025. But also in consumer electronics and so forth, you're seeing a lot of demand in the whole electronic space, including electric vehicles, charging stations, and the infrastructure surrounding EVs.
And what geographies do you see this demand coming in from?
We think India is going to have strong demand this year, apart on the industrial side, clearly on the investment side. We think the United States and most of Europe as well. Our question is how will the Chinese economy react to these tariffs, and how will the Chinese economy react overall, and what impact could that have on precious metals?
Oh, well, absolutely. Michael, the other thing really is about the overall demand. When you look at the Indian markets, I mean, we're looking at almost 100,000 rupees per kg of silver here. So even as the international markets are far away from its all-time highs, the Indian markets are there, and yet there again. How are you looking at the buying pattern here? Because while we've seen investment demand strong, we've perhaps seen the jewelry demand stronger as well. But the whole demand for articles, artifacts is something that has constantly declined.
Well, I mean, if you just take January, for example, last month, so over 28 million ounces was imported into India, mostly from China. But that's a 36% year-on-year increase. A lot of that was targeted towards your growing ETF sector, all right? And so the import strength is mainly investment related at this point. And we're hearing that jewelry and silverware demand might be somewhat subdued. But as you know, those are two very price sensitive categories.
They are, yes. Michael, also, what's your sense on prices going forward? Because when we started this year, most people thought that we would be going much higher. Even now, when I speak to a lot of experts and banks, they believe that silver could outperform gold, especially given the fact that the gold and silver ratio also is quite supportive of silver buying.
Well, the prices have been interesting so far this year, right, Manisha? We're up 12 to 15%, depending on what region you're in. I leave it to the experts to make a price prediction. So if you look at what Goldman Sachs says, you know, $35 a year, Citibank, anywhere between 30 and 32 as an average. The LBMA forecasting survey had price ranges as high as $47 for an average. So look it's anybody's guess. We think that the market is ripe, though, for further growth to build on the great results we had in 2024. And we think that investors will start moving into silver more throughout the year.
Michael also talked to us about the global deficit that we are seeing this time around. And as a couple of months pass by, what is your sense now on demand and supply for this year? And what kind of a deficit are you working with?
So we think that overall global supply is going to mine supply is going to increase only because of some new projects coming online, mostly in Mexico. But we believe that we will be in a deficit again this year. This will be the 5th consecutive year. We think that the deficit will be smaller than last year, but at 150 million ounces, that's still quite significant.
And that does tell you that the prices will perhaps be supportive, and the gold and silver ratio does tell you that the silver buying perhaps is quite lucrative. Michael, thank you as always for joining in and making sense of what silver markets really are doing in sense of prices, demand, and of course supplies. Well, with that, it's time for a short break, but don't go anywhere. This discussion continues on the other side. Welcome back. You're watching Commodity Champions, and we continue our focus on precious metals. We are now joined by Varghese Alukka, who's MD of Alukkas Group, and Neel Pethe is Head of Management at Waman Pethe Jewellers. Gentlemen, I thank you so much for joining us. And what interesting times, because last year we saw a string of all-time highs in gold, and in 2025 till time, it has been on 11 days that we have seen gold prices make all-time highs yet again. Well, after nearly 28% of gains in the previous year, gold prices are trading up by nearly 12% as well. So best of Trump trade and better performance than various asset classes is what gold is given to various investors. But what does it really mean for consumers? Because we do hear that many consumers are on sidelines because of these high and volatile prices. Mr. Varghese, what has been your sense? How have the consumers reacted to these higher prices?
Good evening, Manisha. So we have seen the gold prices gone to 8,075 now, which is the highest in India in the retail price. So maybe last 2-3 weeks, we have been seeing every day there will be around 50, 70, 80 rupees going up. And we have almost reached 8,075 per gram. And we still feel customers are like looking into buying jewelry rather than buying in the cash. They are looking into exchange their old jewelry into the new jewelry. So as of now, what sales we are having, it is by 50% of exchange jewelry is coming. And customers are still looking an option whether there will be any correction. But if you look into last 1 month, every day the prices are going up. So there have been a small dip in buying around 10 to 15%, but the jewelers in the south have given 50% off on making charges on jewelry. So there is a little rush, but till then customers are very much into worried that the prices are skyrocketing and the exchange facilities are given. So there are a lot more people buying in coins, someone are buying bullions, and even lightweight jewelries have been sought after the gold price has gone up so high.
Oh, I'm sure of that. Mr. Varghese, also, that is what the consumers have seen an impact as jewelry industry with the gold prices moving the way they are, whether it is about your buying, your gold metal loans, your hedging positions. What has been your reaction to all of that?
So as of now, for last 5 years, we have been doing the fixed purchase. Whatever has been the rate, we fix and buy. There is no, in our company, we don't do the gold metal loan or on a fixed basis. So as of now, for last 5 years, we see it is have given good returns and the prices have been going up and the inventory prices have been going in a higher way. So once we are into this process of buying in a fixed way in the finished goods, where we sell the finished goods to the customer, we feel the rate is the way customers can buy, and we are not much worried, but we see in the long run the rate can even go much higher, as we have already seen 2009 55 or 2009 60, which will be reaching 3,000 or 3,250. So as of now, as a retailer like us, we are okay, and there is no issues with us, like as we only do in a fixed purchase. There is no threat of gold metal loan, whether you need to pay margins or not.
Oh, well, that is good to know, because we do hear that a lot of jewelers perhaps are stuck because of the way the prices really have moved. Neel, I want to come to you and understand on how really has been the market for you with these very volatile prices, all-time highs. I do know that people are still buying because they believe that the prices will go much higher from here. But there are some who basically can't afford there with the way the prices have been moving. What really has been your understanding or your feedback from consumers?
Thank you, Manisha ji, for having me on the show. What you say is quite right. As also Mr. Alukkas mentioned, people are like competitors are responding for this with subsequent discounts on making charges and things like that. And as you said, people, as the price is going quite up, it is somewhere 86,300 right now, plus GST for 24 carat, and how the price is going up is where people are maybe shifting to a little lower caratage of jewelry, and we have also started stocking that up to beat this market trend right now, and also help people in having gold, which they would definitely want to purchase sooner or later, because wedding season is coming up soon, and so hoping for the best.
I'm sure. Neel, also, how have you seen the exchange side of it? Because as Mr. Alukka said, that almost 75% of jewelry that is being sold right now is in sense of exchange. Is that the trend that we are seeing in western part of India as well?
Yeah, I mean, people do recycle their old jewelry and get some new jewelry made all the time. But during this condition is where we are seeing people recycling as well. Also, a lot of people, due to the rate going up and due to this uncertainty, are also focusing on purchasing bullion, and that is where their investment part comes in, where people are looking to invest in raw gold as well. So it's a good thing for the industry, but let's hope the marriage season comes soon and we open up very well.
Oh, well, absolutely. Mr. Alukkas, that is my next question, really, because when you look at the ETFs, we've seen strong buying there. We've seen funds buying, flexi funds do well because people want to have some exposure in sense of gold. Not everybody wants to buy in physical jewelry sense there. Have you seen that trend of people buying more bullion or more solid gold jewelry for that matter?
We have now tied up with MMTC PAM with the DigiGold. So there are little more customers coming into that platform and buying online and depositing small amount to get a delivery later, or they want to exchange with their ornament. So some segment of customers are looking into DigiGold way, and there are some customers who now wanted to buy coins or small bullion like 5 grams, 10 grams, 25 grams, the TP bar, biscuits, MMTC biscuit. So the ones who are looking to buy for their jewelry in coming season for wedding, they are looking, these prices are going. So there is, wanted to buy in coins or bars and keep it for later on for their wedding purposes and all that. So some booking and all that. But as usual, when you see, there are some EFT people are looking to paper gold way, whether they can get the returns. But most are looking into buying in a physical way from us. So that we see there is a future that customers still looking into buying, even the prices are going up.
Oh, I'm sure there would be some people who would still believe that the prices will go much higher from here.
Yes.
Neel, what is your sense? As Mr. Alukka said, that the industry believes that 3,000, 3,200. I was talking to somebody today and they said once 3,250 breaks, then 3,500 is a possibility as well. I mean, we're in very uncharted territory right now and there are a lot of numbers being thrown. But what is the general idea of the industry within on what kind of prices, calculations are you guys doing?
So Mr. Alukka said it very rightly that 3,000 or 3,250 is where the industry is thinking about, and that is where I also assume that is where we will be heading to, because of the uncertainty we can't say a lot, and it's right now showing 29.41, 29.50 is where the price is right now. So let's see how it goes, but 3,000 is what everyone is expecting at least.
Neel, also as the gold prices, the reports in last couple of months show that gold, of course, is a major favorite here. But with the diamond prices having come off, that is another thing that people are buying. Lightweight jewelry, fusion jewelry seems to be in as well. So what is it that you were looking at in sense of putting out, launching, luring customers with at this point in time?
So we always try to have a mix of tradition and what people want, like minimalistic jewelry or something like that. So that is why we have launched a few collections recently, which are tradition based and also trying to connect to the new age customer who want minimalistic jewelry or with something their grandmother has and which she wants to connect to it by possessing something like that, but not as heavy as what her grandmother had, because you can see the price is like going up very rapidly. So we are trying to make a fusion of that, and that is where we have a series of collections which is named Navinya, and we have recently launched. We will be recently launching a collection, and so we will want our customers to be ready for it. And also, if you say for diamonds, yes, diamond prices are also a little affected, but I think so since it is affected, it is a great time for the consumer to buy it, because there is no time like right now to buy anything. So that is what I would suggest our fellow consumers.
All right, so new launches and more offerings coming into the market there. Mr. Alukkas, another thing that we've seen in the last some time, and the expectation that in next 2 years, 3 years, we could be looking at hundreds and thousands of newer stores coming in. We do know that you have been on an expansion spree as well. What does that mean for jewelers as an industry right now? Creating more space, more expansions. Do you think jewelry is a business that is going to explode going forward? I mean, that really seems to be the view right now.
Yeah. So most of the corporates are looking to expand. They want their market share to go up. So as of Alukkas, we are on 60 stores in the south, and we still looking into expand into the south market into 2 tier, 3 tier, where we are looking at our numbers into 100, where we are still looking to expand by 40 stores. Most of the corporates are now wanted to expand into more territories. They want their market share to go up. So you can expect this corporate now, new other and different corporates are into the jewelry, because most jewelry stocks are doing well and the prices are going up. So you can see most of the corporates will be expanding in coming 2-3 years to get into outdoor markets there, whether in metros or 2-tier or 3-tier. Their main wanted to increase their volumes and they wanted their market share to be there. So the expansion mode is on for all the jewelers. I mean, all our corporates are looking into expanding to the more numbers in all over India.
Mr. Alukka, the last question then, and we do understand that gold always is a first preference and almost 60 to 80% of all jewelry that is sold is predominantly gold. Diamond seems to be making inroads, and especially with the prices slightly off than what we saw in 2022. Has that done well as well? Are gemstones doing better? Are precious stones, colored stones doing well? Or is it predominantly yet again gold, which seems to be more in demand?
Last year, the diamond sale, what we felt is a 25% of increase. So as because the gold price also is going high, there are customers who are looking into 18-carat jewelry with diamond jewelry. The celebration, they prefer to have something other than the ones which always wear jewelry, wanted to have a different taste in their fashion and all that. So diamond jewelry is picking up into all the south states with lightweight collections, and even the 18-carat jewelry make the gold price a little lesser. So extremely diamond jewelry is doing well, with the platinum jewelry also is picking up, even precious. So more and less, if the gold price also is going up, you see there are people to buy diamond jewelry. So in the south, most of the jewelers now are doing well in diamond jewelry.
All right, so whether it's exchange or diamond jewelry, gold essentially as an investment, and of course, more buying happening in bullion is what we are seeing in sense of gold, with the industry still believing that the prices will go much higher from here, and it would perhaps will have to be more offers, waiving of making charges in some sense is the way to get consumers in. But thank you so much, Mr. Alukkas, Neel, for joining in and making sense on what really is happening in the jewelry industry when it comes in the Indian markets, especially with the gold prices running where they are. Well, with that, it's a wrap on this edition of Commodity Champions. Stay tuned to CNBC TV18 for more news.